Welcome back to Designing Tokenomics. This is our first unit, and we are going to be discussing the most important question. And if you understand the core tenets, the core thesis behind this question, well, you'll be well on your way to also understanding the principles behind designing a token or designing your tokenomics, and also when it might not be relevant. And so this unit, we're going to be talking about why to launch a token. And it's going to be part of a broader topic that we're going to be touching on this unit and next one as well, which is the use cases behind when you'll want to add a token to your project, when it makes the most sense, when it makes the least sense, when you're just kidding yourself and kind of using it to fundraise money, which I'll tell you right now is a no-no. So without further ado, why launch a token? So tokens are the ability to add commercial and interchangeable asset to a community, to a protocol, a company, a DAO, whatever you want to call it. And it's one of the biggest innovations in Web3, along with kind of distributed trust. So tokens are that connection between financial data and digital data. And they combine those two, and that's a very, very powerful effect that connects these two worlds that wasn't possible until now. It's the value layer of Web3, of this internet, and it's also digital ownership. So tokens unlock all of that, and that's the core thesis behind what makes it so important. And in this unit, I'm going to cover 7 reasons for launching a token. Now, even among those, they're not all created equal. Some are better use cases than others. And spoiler alert, in our next lesson, we're going to be touching on the real reason why I think tokens should be launched, like the strongest use case. So spoiler for that. And the thing to be really aware of here is that launching a token isn't so simple. And if you do it wrong, or if you do it for the wrong reasons, it can be just as harmful for your project as it can be beneficial. It's not this magical cure all. So you have to be really aware why you're doing it. And also you have to have a high degree of self-honesty, and don't kid yourself around of you're launching it to fundraise, but you're saying that you're launching it for governance. That happens a lot in Web3. And before we even dive in, you should really evaluate with yourself, after we go through these different reasons, why you're really launching a token. So the 7 reasons that we're going to be covering can be broken down into 3 main groups. So the first is funding, and that goes into bootstrapping and raising venture capital. The second is governance, so active token governance, or if you're just going for decentralization. And the third is utility, so coordination between different actors, paying gas fees like in Ethereum, and access, community tokens and things like that. And we're going to be diving into all 3 of those. So the first one is funding, and this is really the most common one. And tokenization gives liquidity, and liquidity brings financial interest. So wherever there is the ability to trade, humans give things value and happily buy, own, and speculate. And tokens are no different. Funding a project with tokens is one of the most interesting and unique aspects that Web3 has brought to the table. It's a simple, flexible, and novel way to create liquidity in a financial ecosystem where there really wasn't any. So beyond the creation of a new technical way to get funded, right, this is token instead of dollars, on a more fundamental level, tokens open the gate for the creation of value kind of ex nihilo, as in from nowhere. Just by getting people to believe in what you're building, you can now generate tokens out of thin air, quote unquote, and accrue real financial value. And I'm saying real financial value and thin air, kind of the parentheses there are, well, out of thin air, that's the same thing as doing a startup. You're getting people to buy into a vision. So this isn't completely new. This exists already. And the real financial value is in so much as someone is willing to take those tokens and actually do real work for it. But tokens are much more flexible, and they're this new kind of easier mechanism to do that. They're easier to distribute than equity. They're more liquid than equity. And so it's garnered a lot of interest. And that's why funding is a prime use case for tokens, right? People believe in the upside of the project, and so they want to get in early. Now, fundraising with tokens can be divided into two categories. And the first is if you're bootstrapping a project, and the second is if you're raising funds from investors. So each is a different profile for how to fundraise and really why you are fundraising. So bootstrapping is really hard for any new idea. And time is money, and usually projects need more than time. They need developers, designers, servers, and everything else. And bootstrapping requires you to fund these projects out of pocket, which can be pretty expensive. Now, launching a token can be a way to raise funds for your project, right? So why launch a token? I mean, why not simply raise dollars from investors and from friends, from those same people you'd be bootstrapping? And the answer can be broken down into three. So first, most projects are not a good fit for financial investors, as in venture capitalists. Investing in startups is a hard business, and most startups fail. And that's why investors, when they invest in a startup, are looking for something that has massive, 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 massive upside, like 1,000x return on their money. That's the only way that the business of investing in startups works. If 99 out of 100 startups fail, well, you need one of them to succeed and return all of that capital. And now, the idea you're working on might not fit that bill. You might not be working on the next Facebook. You could be working on a really successful, small to medium-sized business, and that wouldn't be a good fit for financial investors who invest in startups. The second is raising money from investors is really, really hard. Not everyone knows how to do it. Not everyone has access to those people. Not everyone is born in the right geography. So that's another reason why you might not want to raise money from investors. A third one is you want to maintain decentralization, right? Part of the Web3 ethos is decentralization, incredible neutrality, and trust. And when you accept a venture capitalist or a financial investor's funds, you are giving away some of that decentralization to another party. You're also mixing up incentives because they have a financial incentive that they have to make that 1,000x return, and what you're building might not be the right fit for it. And so that's why a lot of people want to bootstrap their products. And that's why many people believe that launching a token can help them bootstrap their project and be a good solution for it. And the idea is you can raise funds from the people who believe in what you are building and they are aligned with what you're building. So that's kind of the core concepts of why you would fundraise with a token, why you would use a token to fundraise via bootstrapping. Now, the other mechanism is fundraising from investors. And we just went into the reasons why this might not make sense, but the reasons why this might make sense is that venture capital is a really large, well-developed ecosystem, and Web3 is a new area of focus for investors. There have been multi-billion-dollar funds launched over the past 2 years in investing in startups. And so in an ecosystem where tokens accrue value, and not necessarily the builders and the companies that built them, investors have widely adopted to invest in tokens and not just companies, right? There's no Ethereum company to invest in. There's no Bitcoin company to invest in, but you can invest in those tokens. So if you're building a project that promises a huge amount of upside and requires a heavy amount of upfront investment, well, fundraising from venture capital probably makes sense. Selling tokens in the future or present has been seen as a good option to get investors interested, and you're raising capital at a higher company valuation, and simply you're raising more capital than you could bootstrapping. Investors can also help with all kinds of other things like company building, and some also have a lot of Web3 infrastructure specialty and expertise, and they can be really, really helpful. Now, whether this is the right move for a token really depends on the kind of Web3 project you're building, right? Some tokens suffer greatly from having been sold early to investors, and others can cause decentralization centralization, a splitting of your community where the investors who got in early want to get out late, and everyone else feels like they're getting dumped on. So it can really cause a misalignment of incentives that you want to be aware of. Another factor is a lot of venture capitalists have to return that capital within a certain time frame, and to do that, you might have to extract more value than makes sense. Now, there is a word of caution on using tokens for fundraising that is really, really important. Now, and I can't stress how important this is, because fundraising is a real an important need for builders, and I feel the pain here. I launched a startup, we raised some funds, it was really, really hard, and I've been bootstrapping it ever since. It's a really hard challenge to build something without fundraising. So I feel the pain, but this shouldn't be your primary reason for launching a token. Why? Now, most tokens that launch for these reasons, and really these reasons alone as in fundraising, are basically securities, and they don't pass the Howey test. Now, the Howey test states that something is a security if it's 1, an investment of money, 2, in a common enterprise, and 3, with a reasonable expectation of profits to be derived from the efforts of others. Now, if your token is simply a fundraising mechanism, well, that is going to be a security, and that is illegal. So you really want to be aware of whether you're doing it for the right reasons. Now, secondly, you might be fundraising from a group of people who are not aligned with you and what you are building. And that's the classic problem of raising from venture capital. Their interest is purely financial and incentivized for you to grow as much and as fast as possible so that they can dump their tokens on the market and return monies to LPs. Now, that doesn't make them evil. That's just their business model. And so if you are building a long-term project, or if you're building something that you want to last, you should really be aware of the pump and dump mindset that happens when you take outside investor capital that's looking for a relatively quick return on investment.